US dollar is moving lower the day after the FOMC decision. What are the technicals forecasting? Euro US dollar price forecast. Cautious bulls keep adding longs. Oil prices slip lower. US seizure of Venezuelan tanker. IEA forecasts in focus.
Russia Central Bank reserves a lull. Rose from previous 733.4B to 741 B. Bay Street may open slightly higher.
Euro US dollar remains firm with US jobless claims data on tap. Brazil retail sales unexpectedly rebound 0.5%.
Investing live European FX news wrap. SNB keeps rates unchanged. Sounds more optimistic. Canada exports increased to $64.23 BYD in October from previous $60.58 B.
Canada International Merchandise Trade up to 0.15 B in October from previous 6.32 B. United States continuing jobless claims below expectations, 1.95 in November 28th. Actual, 1.038 MEM. United States initial jobless claims came in at 236K, above expectations, 220K, in December 5th. Gold prices consolidate at elevated levels. Traders digest Fed outlook. U.S. initial jobless claims 236K versus 220K estimate. U.S. trade deficit narrows to 52.8B. Euro. Swiss franc slips as franc strengthens after SNB holds rates at 0%. U.S. trade deficit unexpectedly narrows. In September, U.S. weekly jobless claims rebound more than expected.
Dow Jones technical analysis after last night's FOMC, bulls holding. Dow Jones technical analysis after last night's FOMC, bulls holding.
Euro. Swiss franc slips as franc strengthens after SNB holds rates at 0%. U.S. trade deficit unexpectedly narrows. In September, U.S. initial jobless claims 236K versus 220K estimate. U.S. trade deficit narrows to 52.8B. U.S. weekly jobless claims rebound more than expected. United States continuing jobless claims below expectations, 1.95 in November 28th. Actual, 1.38 mem. United States initial jobless claims came in at 236K, above expectations, 220K, in December 5th.
Canada exports increased to $64.23 BYD in October from previous $60.58 BYD. Wait, I don't think that audio worked, huh? Well, let's try it again. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So welcome. Let me pull up the chat. And also, there is a poll for you to answer about your risk tolerance for today. Remember, is anonymous. He's anonymous. And I'm also trying to find the chat if you're going to ask me questions. I guess I need a chat. Oh, there it is. There we go. And no sound. Yeah, so I figured I saw it. That's too bad that happened. But there's no need for me to repeat. I was just telling you how much I love you and that you are my sweet baby. And I will protect you and care for you. These 5 words I swear to you. So anyways, we'll do some technicals and fundamentals today. Technicals we will do on the Trader's Way MT4 platform. The fundamentals we will do on the TRADARS Analytics platform. Okay, I'm faint. That's probably because of yesterday's FOMC meeting. So maybe that's better. You're like, oh, Wayne, that is beautiful. There you go. All right. In the last 24 hours, the risk score has declined to 2.11. It was way higher yesterday after the FOMC. So one of the things I'm very happy with is how quickly TRADARS adjusted to the change in risk tolerance. Even though we look at 51 variables in multiple time frames and the relationship between the variables, well, I kind of just thought it'd be, so much more focused on longer term and medium term, but it turned out it just saw the response to the market in regards to the Fed decision, and he immediately adjusted. Amazing. Okay. This drop along with slight declines in US dollar index suggests a shift towards risk on as investors react to ongoing market dynamics, including volatility in commodities like gold and silver. The changes reflect a mixed sentiment across indices, with NASDAQ and S&P 500 both showing positive movement, while bonds and dollars face downward pressure. Bitcoin way back down to 90 again. Okay. So his biggest winners, silver, euro dollars doing all right today. Gold, okay. European stock markets are not amazing. So not a lot of movement right now, but looking at a risk on color. Let's get some updates on headlines.
U.S. stocks may give background as Oracle plunges.
Dow Jones technical analysis after last night's FOMC, bulls holding.
Euro. Swiss franc slips as franc strengthens after SNB holds rates at 0%. U.S. trade deficit unexpectedly narrows. In September, U.S. initial jobless claims 236K versus 220K estimate. U.S. trade deficit narrows to 52.8B. U.S. weekly jobless claims rebound more than expected. United States continuing jobless claims below expectations, 1.95 in November 28th. Actual, 1.038 mem. United States initial jobless claims came in at 236K, above expectations, 220K, in December 5th.
Recent news. You look at the Aussie jobs report, they lost jobs, but the unemployment rate fell. Yeah, that can happen. They're two different measures, obviously. So unemployment, 4.3, not too shabby in Auslan. Then we go to the U.S. Continuing claims. Ho, 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 ho. Big pop there, huh? Big pop there. Uh-oh, now we're going back to the idea that the employment market is collapsing, I guess. Big jump from 192 to 236. Could be that government shutdown still having impact, right? BLS, because look at the fall in that. How could you go from 192 to 236? These are usually incredibly stable numbers. So that is well below average. That is well above average. Yeah. But that would lean to putting a Fed cut. So you're going to have to watch the yield curve, particular today. We covered that quite a bit yesterday. Hey, Hope. You know, Hope, one of my goals is to get down to South Africa. You're in South Africa, right? I'd like to head down there and say howdy to all the brothers and sisters. Yep. All the brothers and sisters back from our time in when I did the presentation, which is probably 6 or 7 years ago now. Wow, has it been that long? Yeah. Brothers and sisters, pump up the volume. So, anyways, lots of good friends down in South Africa. I did Johannesburg, but I'd like to go to Cape Town this time. Now, Hope, if I've totally screwed up and you're not even from South Africa, I apologize. I think you are. Maybe I got it wrong. What else going on? Nothing really on the calendar till tomorrow. UK GDP and ish kaput. So there's our 211, and we were as high as 289 yesterday. Yeah. Oh, that's so funny. Yeah, in Asheville. That's right. I apologize. Actually, I'd like to go to Asheville as well. I talk about it every year. But how about this? I was in London having lunch, and there was two couples sitting next to me. I don't know. I was all by myself, but the table next to me was two couples, and fabulously sophisticated, elderly couples, um, from the UK, British, obviously. And so, anyways, we were talking, and then I said, "Hey, well, have you ever been to America?" And they're like, "Well, our favorite place in America is Asheville." So I'm like, "Whoop whoop, Asheville's right. Asheville's great." So, anyways, imagine that, huh? Very sophisticated um, well into retirement, elderly UK couples with money. They've been everywhere. And they're like, Asheville's the place for me. All right. All right. All right. So, anyways, it's been bumpy as of late, but generally still okay. Yeah, the webinar page is glitchy. I'm fixing it. Should be good next week, AK. But you should be, but that's that. I guess, yeah. That's all I can say is some people have that glitch. I am replacing the entire infrastructure. Okay? Okay. But you should be able to log in TRADARS, but if you can, email me the email address that you use to register. Wayne at traders.com. And well, like do it now so that I can update it while we're here. And then you too, Richard. All right. Okay, so we'll just take a look at some of the things. So vol went up yesterday. Is that right? Not the double or triple check. This must be updating. At least it's updating in the back end. But did vol go up yesterday? Interesting. Silver up makes sense. Went to all-time highs. And it's not properly analyzing the 10 and the 2. It's supposed to be analyzing the 10-year and 2-year yield, right? The 2 times spread. So it's not doing that, obviously. All right. What else? NASI did all right yesterday. Gold did okay yesterday. DAX did okay. S&P 500 did pretty good. Dow did great. High yield went up, so that's slightly, 1/3 of 1%. So slight move into risk on. Dollar fell, which makes sense. Slight move to risk on. But investment grade bonds went up too. Pretty much the same as so treasuries and bonds got bid yesterday. Interesting. Wow, strange reaction here because bonds went up and stocks went up. High yield went up, but low yield went up. Interesting. 10-year treasuries. Okay, the yield fell, which means there was a bit of a rally there. And then 2-year, look at the move here that between the 2 and the 10. Massive jump here. And a fall, a decent fall there. Huge move here, decent fall there. Interesting. So money obviously came out of the 2 and went into the 10. Interesting. Nikkei had a bad day, and oil is not consistently popular. Okay, well, I'll get into it. Still generally working fine. So it's been a bad week, but it was a good day. Didn't even need my AK. Right, AK? Dad, still don't have your email. So anywho, not I. What else is on the calendar? That should be there. Cool. Burn through some charts. There it is. Got it, AK. Okay, so anyways, Swissie's strong today. They kept interest rates the same. You can see down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. So you'd think an up, and then drop it like a top. Here's your pound Swissy, pretty much the same. Pound dollar, just the opposite. Up, down, down, buy off the moving average as support. Up. We're getting close to target. At some point, there'll probably be a down, down. Click on the roll reversal. And then 24 hours from now, we should be at 134.5. What do you stink? Smell like a plan? Again, this is just implied volatility. You're still going to have to do your own technical analysis, but it gives you an idea of what is a normal pullback, and that's most of what technical analysis is about. Okay, so what's tomorrow's plan? Variation of that. Kiwi Swissy, just like the other Swissies. Yen sort of not doing much right now. Okay. The yens are, shows a little bit of yen strength, or at least Asia Pacific weakness. But you may just want to stick to the Swiss franc today. Like, look at that. It's unbelievable. Bitcoin. Oh no. Crude oil Remember, we're bearish, just working beautifully. Remember, we were talking about the sell at 60, not because of technical analysis, but because of fundamental analysis. Aiden, our artificial intelligence at TRADARS.com, 6 months ago told us to expect 45 on crude oil. 45! And we were in like July or August, and it was like 45 by March. Yeah. How about gold? Gold! Trying to make that little up. So we had the big up, the big pullback, and now it's trying to get to 4,250 this time tomorrow. What do you think? Is that your plan? Next 24 hours? See, to do this, you want to first, let's say, identify support and resistance, right? Okay, so there's a zone there, and there's a zone there. And of course, there's a zone here. Okay, well, implied volatility is pretty much picking that up, right? Okay, so the first thing you got to do is breach, pull back, and there you go. All right, Alan, try to log in. Request a new code. Neat, right? So that's a way to burn through the chart. So this volatility radar is free. The scalping radar is free. The news radar is free. The risk radar is free. With correlation metrics, that's free. The squawk box, that's
U.S.
free.
initial job.
The market radar is free. Now we'll move into some of the premium stuff. Let's see how you guys are feeling today. Yeah. Looks like most of you most of you are risk on. 2/3 are long, 1/3 is short. That's interesting. Now, if you have risk off, I imagine what you're looking at is profit taking due to seasonality. That makes sense. That makes sense. I wouldn't be very risk off, though. Not sure why you'd be very risk off. But yeah. USD Swiss franc biggest loser. Now remember, this is long-term and short-term technicals and long-term, short-term fundamentals mixed together, as well as some of the sentiment indicators. So there's a lot going on in this number. Yeah, 12/12 is a big day for sure. Okay, crypto's down. all that kind of stuff. So these are not just overnight scores. If you want to know how we do the scores, here you go. You know, when you're talking about the square root of time, you're getting esoteric. The square root of time. Well, what did he say, Richard, that made you so bullish? Let me put it back. Mhm. Yeah, well, I believe what was said is that tariff related inflation on goods is likely to appear a little bit between now and the February CPI reports. We haven't seen the inflation before the government shutdown because there wasn't enough time for it to enter and be recorded. But now that time has happened, but then we were not recording anything. So now we got to record. So it's still somewhat hidden. So what Powell and the FOMC said is that maybe some goods related tariff inflation would appear in the January February period and then soften. So that's one thing, right? But ultimately the market doesn't move on inflation and GDP and that kind of stuff. It moves on the Fed's change in policy or lack of change in policy due to the data. And so to supersede that, the Fed saying inflation could suddenly come up a little bit and then come down a little bit in the future. Okay, but what did Powell really say? They're probably paused for a while. I'd say at least to the next SEP, but they might just be done for the first half of 2026. And that's by far the bigger, more more important information than just inflation up up or down, jobs up or down. Those things are important, but only if the Fed changes their policy. And we have politics going on too, right? A new chairperson being put in place in June. So without the data and without an economy freaking out, they could just call this neutral. 3.5 on the overnight repo. 3.5. They're like, done. We'll leave it to the new dude. Thank you, Alan. Yeah, someone else has mentioned that they have a similar problem. I've never seen it, but let me ask. I'll have Aiden look into it. Okay, Devin, I'll ask too. So GDP, Europe versus US, interest rates, Europe versus US, inflation in Europe versus US, unemployment rate in Europe versus US. So we're looking at all of that. Capital stock of euro by institutional investors and asset managers. They're long, but less long week over week. Dollar is much more long in position and grew in flow, favoring a net short bias for euro dollar. Yet seasonally, 66% of the time, euro dollar's up in December. And here's your executive summary. Cool. Settings, and I don't want these breakouts. Well, actually, let me put the breakouts here for you risk off people. You party people. So this is one way to say, are any of the trends breaking? Okay, so looking at Forex, you can see this triangle looks like it might be breaking to the downside. This up channel might be breaking to the downside, might be reversing, might be reversing, might be breaking out, might be breaking out, might be breaking out, might be breaking out, might be reversing. You see how helpful this is? Now, even though they're breaking or potentially breaking, I'll tell you me. I'll tell you me how I like to trade, if you don't mind. Like, oh, this Wayne, all he does is talk about himself. Yeah, well, it's quiet in my office. Um, I like to trade the pullbacks, or let's say double tops are best for kicking off the moving average. But let's just leave it with lower low, lower high, roll reversal, take it down. That's how I like to trade that. Or double top and a drop. Okay, that's how I like to trade that. So you can go through all of these, and they give you a heads up that are hours, if not days, in advance for you to prepare. So look at this. How would I trade this? Well, there's two ways of trading this. Let's extend this moving average down. Okay, so that is one way of trading it. Let me draw it this way. Breach, pull back, down. And then there's a follow-up to that, but we don't need to go that far because it's too far in the future. Now, the second thing is extend this color and thickness. I want a thicker line. Okay, there we go. And so the other variation, let's do this one in pink, is more like down, and maybe it does go like this. Okay, but the idea is there's two selling places, plan A and plan B, and ultimately they're not much different just depending on the timing. All right, Tevin. All right, Alan. Request a new code by logging in at tradars.com. So go through the whole process. Don't enter the old one. Go to tradars.com, log in, request a new password. All right. Commodities due to tariffs? Well, not directly, but perhaps indirectly. Take a look at crypto. Now, because I can't cover everything, I'm going to go through my normal YouTube reduction in assets just because we don't have the time to cover everything. You guys like gold. For indices, we'll do S&P 500. And that's that. I guess we'll do emerging and breakout. Give us more to look at. Okay, so for Bitcoin daily, which is kind of interesting because usually I look at this pattern and I think higher time frame. I think like this, but on a weekly. Okay, so I don't know if we can revert to that, but I am a bull. So what I'm trying to look for is some rationale that if we come up, that this doesn't happen next, which is what the pattern is suggesting. But I'm thinking up, down, okay, roll reversal, and then up into the future. But that was already days old. Yeah. Here's the 10-year T note, bullish with an opportunity on the 15-minute chart. On a daily chart, this shows a rise in yields and less cuts projected by the Fed in 2026 than before. I can get all that information right here. Well, that's not necessarily good. Gold has a lot going on. Gold is busy, so we have trending patterns and reversing patterns locked in. So on a 15-minute chart, bullish with an opportunity. That's great. On a 30-minute chart, we consolidated, breakout, pullback, long and gone, which is this trade. So that looks okay. So on the short-term time frames, we're technically seeing bullish trading patterns and breakouts. 15-minute chart, this says be careful about the higher high. It may be untrustworthy. Same thing here. On an hourly, it's still more bearish than bullish, so that's not great. On the 4-hour, it's bullish with an opportunity. Yeah, okay. So those line up, the 15 and the 4-hour line up, and the daily is bullish with an opportunity. That lines up. Okay. Looks like we got, and we are fundamentally bullish. So if we have like a risk on day, I would imagine that would work based on aggregate demand. Stock indices, we're only looking at the S&P 500. Okay, that's it. And you know what we see on the 15-minute, 30-minute, hourly, 4-hour, and daily chart? Reversal patterns, trending patterns, consolidation patterns. We see nothing. It doesn't exist. So all you're going to have is an unsupported level of price action. So be careful with that.